let us get it started. Let me pull up my share screen and we'll get this in a wrap. Alrighty, alright. So now we have to see my screen. Can you see the screen?
Yep.
Yep. Okay. Cool. So yeah. So this is a book I sent to Rich, and he's going to put it on there so you can download it. I found this to be one of the most books that I've gotten the most help out of. It breaks it down to real simplicity, and I really enjoyed this book. So we'll just go through it. We'll have basic setups on entries and points, and that way we could get basic acknowledgement. I have about 30 plays lined up for next week. We could just go through it. We have many different types of traders here. We could bounce ideas and kind of really get a playlist going. One brain is always better than many brains is always better than one brain. So we could kind of put our brains together and get kind of good plays for next week going. But these are essential types of plays I always look for. In anything that you do, if you're a scalper, if you're a long trade, if you're a swinger, your entry point is pretty much the most important thing you could get out of the market. And it could be a very tough challenge to find that entry point. I know for me, again, that's why I appreciate communities like this that Rich put up together. You have paper trading, which is like awesome. You can get so much experience into just paper trading. And yes, it doesn't add a lot of pressure into your trades because when you trade with real money, you kind of have a different feeling. But it's a great tool to learn, especially when you're fresh into the market. Amazing tool. And what I appreciate about it is the option trading. You can actually paper trade options, and I haven't seen it anywhere. So kudos, Rich. Um, so those are really good tools to use while you're learning, and these are basically basic setups, basic points of the market. As these classes, we have more classes. Different analysts will have different types of viewpoints. We'll have different analysts give different classes, and that way you can actually hone into a style that works for you. Um, but an entry point is the most important concept of this. You know, if you were in the last class, I'm a channel trader. I love channels, and but at the same time, patterns is life. I mean, think about life itself. You you're born, you grow into a kid, you get old, then you die. You come from nothing and you go to nothing. Life is just repeat patterns. You wake up, go to sleep, wake up, go to sleep. So usually 95% of the people in the world have a basic pattern in life. So that's the same way I see the market as well. So these are very important patterns to look at. These are breakout resistance. If you could, I could pull out my little pin. Sweet. Hold on. Here we go. Do y'all see that little circle on the screen? Are y'all able to see that?
What circle?
No.
The circle with the pin?
Yeah, it's like like a little circle. It's right next to breakout on the green.
Yeah.
Yeah, okay. So that way I can actually, so this right here is a great pattern setup. I mean, if you look at it as a channel, but at the same time, once it breaks this top resistance, so it banged here, couldn't bang it at the first two tops. So the roof really withheld, went down, created a wedge right here, and then took from the wedge and tried to attempt the third time and eventually broke out into a bull market, a bull pattern or a bull channel or whatever you want to look at it. But it was a clean breakout. So these are types of setups you always want to look for. even when I'm day trading, I mean, at the end of the day, if you could read a 1 minute chart, you could read a 5 minute chart, you could read a 20 minute chart, you could read a 2 hour chart, and you could read a 1 day chart. A chart is a chart, but at the end, but minute charts and 5 minute charts are a little bit more impulsive because you have to make quicker decisions. But at the end of the day, a pattern is a pattern, no matter what chart you look at. So these are indications. I have these are false breakouts. You see on here that it took 3 attempts for it to take out. Not 3 attempts, really. Yeah, 3 attempts. 1, 2, 3. If finally broke out, but I mean, you can't see the past resistance. There may have been a past resistance here, hit the resistance here, and then fall right back under the wedge. You'll have a lot of patterns that set up like this, where it breaks out and you think, okay, bull run, time to get calls. And then especially on intraday, because this pattern, if you're not aware of it, it can really kill you because the drop is tremendously great. I mean, you could be up 20% here, and then within the next 3 minutes, you're down 40, 50%, which can be a very tragic move. So, I mean, these are just different types of scenarios that I'm just trying to go through so you could get an understanding how the market can fluctuate and attempts different types of patterns to form a bull market or a different pattern to form a bear market. If you see right here, there's a wedge right here, a falling wedge, it hitting the bottom of a channel right here, and then it took off. It took attempts. Number one, created a base here, which was a great key resistance. Never broke this key resistance because if you go back to this diagonal, there was a resistance here as well. So it had historic resistance as well, not just momentary resistance, but historic resistance as well. So it banged here a couple of times and it broke the roof and it created a wedge up right here. If you take from here to here and here to bottom, you see a wedge being formed right here. Then it started his bear market cycle. So these are all types of patterns I always try to look for. Another example of a false breakout into a bear market trend is essentially here is creating a really a double top here, but not. I mean, it was a false breakout here, but it's generally a double top because it never really did a good key resistant breakout. Then you can see well, I mean, if you take this part away, you'll see the bear flag forming right here. So if I draw, see him right here, then it took its bear cycle market into a wedge. Obviously, it doesn't show, future references, but it's creating a nice little wedge right here, and you can anticipate wherever the next resistance may be, that it may have a nice bounce on that resistance.
Excuse me. It all sounds confusing. Just what are these lines? How do you identify the resistant lines?
Okay, so resistance. I'm great. That's a great question. I'm thankful that people are actually asking the question because that was a problem yesterday. So resistance is key attempt. So if I draw a line here, right through here, you see that little circle? If I draw a line here, that would be a key resistance. So a resistance is historical and future, not future, but momentarily in historical points in the market where it had an attempt to break that pressure point or get denied. So if you look right here, where that little circle is following right here, this would be a mainline resistance. But if you look at the bigger picture, that's why I say that patterns are really important, because if you look at the bigger picture, you see the Batman forming, the head and shoulders, the left, head, right. Now he's created a head
It's
and
all
shoulder.
clear, yeah.
Yep. So over here would be a resistance as well, because here it had once it took the bull run, it ran out and it stopped right here. So it went back into a cycle into a midline resistance right here. So here it had trouble breaking back down, you see? So now here is another form of base of resistance. This would be a good place to start a position because you could always play the upside here. But once you see a pattern forming, over time, you can kind of see them forming from far away. Like if you see the left, then you see a little head creating, you're like, okay, this could be a basic head and shoulder. Sometimes they play out, sometimes they don't. Nothing is perfect in life, nothing is guaranteed. But if you understand these patterns and these cycles, you're more inclined to make a right entry than a wrong entry. We all have wrong entries. Don't get me wrong. We all have those bad plays. But with more repetition, more practice, and understanding resistance, supports, trends, channels, you'll have more opportunity to get a win than a loss. So that's why myself, I'm really big into a 15%, 10% cut. So usually what I try to look for and aim is for 10%, 15% gains. Obviously, I love the ones that go 50, 60, 100, 200. I'll take anything that is a surprise. But my key resistance is always 15, 10%. And then on my losses, I like to usually cut on a 5 to 10%. But entry is the most important concept of everything, because even if you're getting the play wrong, you can always cut off of a deal and save yourself a headache. I myself, I am a hard believer that the market is a time thing, longevity. You want to compound your account every play. I mean, if you could just add $30 a day, you would make a great amount of money. But little chips, small piles turn to big piles. If you're focusing on getting a right entry, getting your wins, cutting your losses, you'll be in really good shape. A lot of people that come in the market, especially the new people that are in the market, have gotten ideas from GameStop, AMC, the meme world, that you're going to get in and it's going to go to the moon. But in reality, that's a really bad trading style, because nothing really goes to the moon if you're not, for example, if when AMC was in the $50, $60 area, everybody was talking to the moon. Now it's, $12, $14. And that's a really bad play. So you have to understand the market and what it presents itself. You can be a risky trader. You could be a good trader. Risk always has a reward, but if risk doesn't play out, it's going to kill you. So I'm very big in learning, very, very big. Before we continue here, does any more questions? I'm sorry, I couldn't hear that. That's rough. I can't hear anything. Okay. So, these are just different types of patterns that we're going through. That way you could get yourself with familiarizing how the market plays, how it transitions, and what you're supposed to do in preparation. And anything in life, a game plan is most important. A coach gets paid to be on a football team to create a game plan. If you don't have a game plan, you're going to get smoked. I don't care how good you are. Coaches sometimes win championships because of purely the game plan. It's facts. And the market works the same way. This right here, you can see there's a trend line building here. If you draw the lines on top right here, it's creating a channel here as well. But you see it's resistant picking up on this trend here. So that's the most important trend that you're supposed to keep your eye on. You see here, it comes down, creates a wedge, sort of a flag wedge, bounces up, takes its new highs, but again, a false breakout, because the next day it was down, but it's maintained its support line right here. Went up, hit a resistance. If you could see that little white little thing floating, that's a resistance area, which is very strong. So it bounced off the resistance and took down. But once it built it up a sort of a wedge, if you see this little here, it's a wedge down, a falling wedge. It took a bull run back, but that attempt to break the line created another bull flag, which was, bull flag, a bear flag, which was, death. After that, there was no point of recovery. So these are, if you understand these types of movement, you're more likely to get the good wins or, set yourself for winning plays. Everybody has a different style. If you're, one of those guys that can catch 200% runs every day, by all means, I want to be like you. I do. But I've stayed consistent in this market for a long time because I created a really strict game plan. Sometimes I break my own game plan. I do. I bought $399 puts. I'm up 22%. I should have closed it. I typically would close it, but I gambled. So we all break our own rules. We do. But if the more resilient you are towards your own rules, the more you'll win in the long run because you'll set yourself up a really good game plan. So, other types of patterns you can see is a double top here. It's a channel, a sideways channel at that. It broke the first line of resistance, which became a new support. Hit the top here, took a bounce, went down, actually played the resistance, went up here, and it was a double top. It bounced twice, came down, broke it, had a historical resistance here. But obviously you don't see the actual. Oh, there you go. That's not even close to this, but that's not even close at all. We'll just stick with this because that really messed it up. It broke down, went back, hit that mid line. Once was a support, now became a resistance, and it came back down. Same thing here, which was a bottom line, a double bottom. Created a support here, built this resistance, which was historical resistance, I guess, because obviously you don't see the beginning of it. Hit the resistance on top, came down to the support, and broke up. So in a typical way, if you're looking at this here, once it does a double bottom, double top scenario, I would always see this little resistance because it could be a newfound resistance which created a new bull run. But just like in the past, always watch out for the breakouts, the fake breakouts, because those type of moves can kill you. Price action is one thing that you get more familiarized the longer you are in the market. You'll really get honed into price action, how each candle reacts. So for example, if you're expecting a big bull run, it creates a wedge basically right here, and then it takes really big candles, creates a new support, kind of creates a bull flag here, and it goes up. So the difference between a bull flag and a bear flag is on a bear flag, it falls, creates a flag like this right here. So anything that falls and it goes on a sideways trend is considered a bear flag. And then when it's going up, from the direction up, it creates these bull flags here and it goes up. So the difference is basically just a mini cat bounce, creates a little channel and breaks down. Again, before we go on here, any more questions?
Yeah, I got a question.
Go ahead.
The bear flag and the bear pendant. Can you show me the bear pendant? and the bear flag. I know with the bear flag, I think the pendant looks a little different, right? Just a tad bit different.
Sure. I mean, there's different type of patterns you could look at. I mean, first, I mean, when a market's going live, obviously there's a different perspective because you don't know what the future is. But it's easy to look at something in hindsight and be like, oh, well, I should have seen this. But the more you get familiar with the market, you kind of pick up on those type of patterns. So a bear flag, a bear flag is basically a stock ticker going down, hitting a sort of a threshold, support, giving a false indication that it's going to go back up, but it's really a channel. If you look at it, it's just a little mini channel, and then it doesn't break that mainline resistance, and it falls down. Then it creates as a wedge here, but that's why I'm a big believer in channels and not wedges. I do look at wedges, don't get me wrong, but wedges are really a certain point in a channel.
Okay.
But again, the market is not based on what I know or what you know or what he knows or what he knows. The market does what it wants. It has a brain of its own. But the more you get familiarized with a certain style that you want to really hone into and really, master that style of yours, the more success you'll find over the years. Odin is the same way. He really didn't have a lot of help getting in the market, and I'm pretty much one of those self-taught. So it took me 4 years, like literally 4 years of just plain out misery. And the more you do it, the more you'll get more accustomed to it. Now, 12 years later, I mean, I can look at patterns from far away and be like, okay, this is setting up, but I mean, it took a long time. And that's why I really appreciate groups like this. I mean, it's great. It's great if you could actually share ideas and really hone into, just not a a person's idea, but a group collective's idea, and you can actually okay, I see this, while he sees this. Let me actually not have a closed mind and actually see what he's trying to see. I feel like that's how you become a better trader. At the end of the day, I'm never here to argue with nobody. I just want bounce ideas. Nobody is stupid. There's no such thing as a stupid question. We're just all here to make money at the end of the day. But if we can make it together, well, more the happier, right? So these are kind of the bear flags. They're fake bull runs that are created by hitting a resistance and falling back down. And that was a bear flag. Sorry, a bull flag is the same reversed. So it could create a triangle pendant. It could create a falling wedge pendant, but the main idea that it hits a support area and takes off. So the same way here, it's creating a falling wedge here, hits a mainline support here, and takes off. But if you really draw it, it's really a channel. That's why I really love channels, because you can really find a good entry instead of looking at just the main picture. But again, main pictures are important too, because if you look at here, it's actually a reverse head and shoulder. You see the right wing, the head, and left wing. Boom, 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 take off. So,
so excuse me, Jot. Where is the channels you mean?
I'm sorry?
Can you show the channels that you meant?
Oh,
Just
channels.
earlier.
Okay.
Yeah.
Yes.
I'm talking about the lines. Yeah.
So channels are essential, like a channel, it's a tunnel that the stock moves into, basically. The worst way I could put it, if it makes sense. So a channel is basically where the top of the ticker price action finds a resistance. So if I draw, you know what? I could do this. Right? Yes, I could do this. Perfect. There we go. I can draw this, and that's a channel. Do you see that?
Yeah.
So as the way I trade, the way I find good support entries is the bottom of the channels. It's a good entry till it's not. So don't get closed-minded about it, because over here it could break down. Over here it could break down. Over here it could break down. But as long as that's why I'm a big believer in a 5-10% cut, because I'll trade the bottom of a channel. As soon as it breaks, any indication that it's a break a channel, I cut. Because in my theory, if you're willing to take a 20% gain and willing to take 100% loss, you're never going to make money in this market. But if you take 20% wins and you take a 10% cut, guess what? You're really ahead. And now we're talking about compounding your account. 10%, 20%, 10%, 20% of whatever amount you played that day. And over the longevity of the market, you're going to make a lot of money. I remember one time I was closing $20, $30 days. Trades, I would take 15, 20 bucks. I'm like, yeah, let's take this and let's roll. But my game plan really, I really honed into my own game plan, because that's what my game plan is. And this is the way I trade. This is the way I find good entries in the markets. The same way here. Look at this channel down. And there's a midline channel here, but I only take these bottom trades right here. And that's just my trading style. If you ever look at a chart, to me, they're all, well, that was a bad channel. To me, the market just moves in all channels. And here is a diamond pennant on a support resistance. Maybe in the past here, somewhere there was a support here. And now you're looking at a diamond pennant plus a bull market. Now I look for a resistance. On top of here, you understand that there's a resistance here. I'll take this trade. As soon as it indicates it's going to take off into this area, I cut it. In case it goes back down, well, that's cool. I only took a 5% loss, but what's the important idea is that I could get back in. I can always get back in any time of this period I want. It's not a rush, but in case it breaks and I don't cut it and I'm stuck in this bull run of averaging up, man, your account dwindles really fast. I've seen people lose like $70,000 in options in a couple of days. Like, it's pretty painful, because this shit here will make you really lose a lot of money. But if you just cut here and take a 5-10% loss, then I could look for another support. I could look for, whoa. What just happened? I could take another look at here, and I could take another look here. And these will be my other entries. If this doesn't work, cool, I'll take another 5% loss. If this doesn't work, I'll take another 5% loss. If this doesn't work, I'll take another 5% loss. But one of these suckers is going to work. Hopefully. Even if it's a dead cat bounce and creates a new channel here and it just creates down, then you're really in a good position to make your offset losses. But if you get a good entry and you see that it resisted, you can actually look at a channel being formed. That's why I really love channels, because once I see this channel being formed, I'm more likely inclined to keep my position open. So whenever it breaks out of one of these channels, that'll be my indication to, get out of the trade. And instead of taking a 5%, 10% gain here, I'm more likely to take a 50% here. But that comes with time. I highly suggest a lot of new traders to really get comfortable making 5-10%. Really get comfortable with it. It's small. It sounds small. You tell somebody, oh, I made 20 bucks. They're like, hi, you made $20. But over time, one day will be 20, and the next year you'll be closing $200 deals. And in 5 years, you'll be closing $2,000 deals. And that's the whole point of compound interest. So, do you see the person who asked that? Do you see what a channel is? And do you
Yeah,
see kind of why I love channels?
yeah, it's all clear now.
Yeah, it's my trading style. Some people use the bots, some people use the scanners, but at the end of the day, I have a full idea that it's not about a right way. There's nothing that is right way. Things can be done in many multiple ways. You can go home not just one street, but well, I mean, if you live in the country, then you got one street. But if you're in the city, you don't have just one way home. You got multiple ways of getting home. It's about getting home. That's the whole idea. Just make money.
Yeah.
Yeah, so kind of really that's what I had. Uh, I know some other people have some ideas to chime into. But questions. Any questions? Any questions? No questions.
No questions for me. I'm good. And
Cool.
channels are very good. I really like that.
Can I share my screen for a second?
Yeah, go ahead. Go ahead. Go ahead. I mean, this is why I love this kind of communities. I mean, Rich built really a really good founded community. I mean, we have 14,000 people and growing. I don't know what the number is now, but last week when I joined, it was 14,300 and some odd. So we have so many different levels of experience. I know Odin, he's a really good trader. I know Mike is a good trader. I know personally some of y'all in here, and the rest I haven't really got a pleasure to knowing you. I've only been here for a week, but there's so many good traders here. Look at the the bot that he has. He actually has a ranking on like how many trades they took, what's their percentage of waiting, what is their average returns, and there's really good traders in here. I mean, amazing traders. So the more people you have questions, ask and ask and ask and really get a hone skill in, you could develop your own skill. Because at the end of the day, we're different people. I'm in a different situation in life. You're in a different situation in life. He's in a different situation in life, and the person next to you is a different situation in life. We all don't like chocolate. We all don't like fruit. We all don't like pizza. We all don't like hamburgers. But we all want to eat. That's the whole idea. So if you create something that's good for you, myself, I love milk. I'm a milk drinker. I love milk. But some people are lactose tolerant and they can't drink milk. So, we all have our different things in life. So if we create something that's for us, you'll be really successful. Understand there's going to be bumps in the road. Understand
So
that.
I get it from you that there's nothing constant. It's not a rules or should be the same thing that works for everybody.
I mean, nothing works for everybody, every which way you want it. I mean, value. Like, you know, not everybody could be a basketball player. Not everybody could be a cop. Not everybody could be a firefighter. Not everybody could be a doctor. We need different people in
Yeah.
life to make a society. That's the idea of living. So nothing works the same way. It's kind of like reading a Bible, right? If you read the Bible and I read the Bible, we have two different perspectives of it. But we're reading the same thing. And we want the same thing. We want to go to heaven. We want to be a good people. We want to be a good person. But we don't anticipate it and get the same meanings out of it.
Yeah, okay. So let's just take a look at Netflix price here for a second. Can you
Yes.
see my screen?
Yes, I can. I can.
Okay, as you explained earlier, so as I see here, is this a channel that's forming?
There
And
is
that
a channel
is the
forming here.
resistance line
Yes, there's a
on.
core support line on the bounce. So draw a line right underneath where it bounced from.
On 700, on 1691.
Yeah, right in the bottom, or that double bottom. Go down more,
Okay.
more. Right there, right there. That's the double bottom. So
Okay,
draw a
how to
resistance
draw a line.
right there.
I
It
don't
says
know
line.
exactly. I'm new to this thing.
Okay, click what you just clicked, and go to lines. No. What you clicked earlier. You had clicked something different.
Yeah, what was that? No, I think
You can do Alt
I
T.
didn't click
Alt T.
Alt T.
Yep.
Oh no, it's right there. It's in the bottom. I just saw it. Click it. Oh, there you go.
Oh yeah, okay, it's good.
Okay, so draw
So-
one that's horizontal, like going straight across. No, across the bottom.
The shift button. You should press the
Yeah,
shift
like
bottom
that.
right here. Yeah.
Yeah, like that. But make it longer, all the way to the end of the screen. No, the other side. The other side. Yes, that way.
Okay.
All right, keep going. Keep going to the end. All right, perfect. No, a little bit
Perfect.
more up. That's still crooked. It's a little crooked. Right there.
Good.
So that was the core right resistance. It had a historic past that price was rejected or accepted. Right? So that build up a core strength. Now bring out the channel underneath. Like hit those resistance. You know what? I should get on my channel. That way I could do this. You know what? Let me get on TradingView.
Okay.
I'll show you through mine, so that way I don't have to explain and I could just draw. But you know, like I trade mostly 80% of my trades is SPY. I'm a SPY trader. I've looked at SPY for 12 years. I've diagnosed SPY. I love SPY. I mean, I love SPY. So individual stocks, when they take, you know, SPY never takes that big gap, like $100 point down. Like it never opens up $100 below the last price. On individual stocks that have that huge gap, most of the time they'll never get back there. Like realistic value, they will never get back there unless you go in a big bull run that lasts another 10 years. And maybe then. But by that time, the company is completely different. So let me get on, what is it? Netflix?
Yeah.
All right, now I'm going to share my screen. Okay, share screen. Perfect. Do you see my screen now? Yes, do you see my screen now?
Yeah.
Yeah, okay.
Yes.
Okay, cool. So, I messed that up, but that's a beautiful channel. Super ugly channel, but it's a channel regardless of the fact.
Oh, just share the full screen. You're not sharing trading
We
view.
can't see it now.
You can't see it now?
No, just see two blue screen.
Share the
How
whole
about now?
screen.
You got it? Can you see it now?
No.
Oh,
You know,
man.
in the screens beside applications, just click on a screen one.
How about now?
Yeah, it's good.
Okay.
Okay. So that is a channel, a really ugly channel, but a channel regardless of the fact. But stocks that gap like this, like huge, massive. I mean, this dropped from 500 to 450 and it died all the way to 300, and it went from 300 to 240, 330 to 240. These type of stocks, once they do these kind of big, massive gaps like this, I mean, and when they have little gaps, you could have hope of recovery. But like these massive gaps, I would bet somebody at $50,000 that Netflix will never get back to $700. I mean,
Why is that?
because I mean, when Netflix came out, it was a growth company, right? It was basically the only company available for streaming. I mean, really, I mean, there was no other competition. It was Netflix or nothing. Then Hulu came. Hulu started taking some of the market shares, but now, I mean, there's HBO Plus, Disney Plus, uh, Showtime Plus, Hulu. There's so many of them now that the market share is more
To be honest, I
diluted.
was gonna ask you that question, whether Netflix is going to bounce back on 700.
I would,
But
I would, I would be so surprised if it goes to 700. I don't think in ever history of Netflix ever again it will do that. Because I mean, it's not a growth company anymore. It's kind of did its thing already. At one point, it had 100% of the market share. It was Netflix or nothing. Now you have just so many companies that are doing it. I mean, Peacock does it for free. You just watch ads. Now that Netflix is putting ads and still making you pay, that's horrible. Because you could just watch Peacock for free. Just realistic value. If Netflix wants to change its outcome, it has to go with the times. You can't charge people and still put ads. That's just stupid. And even on YouTube, when you get the YouTube Plus or YouTube Red or whatever you call it, you don't watch ads. That's the whole point of paying for it. But now that you got to pay for it and watch ads, nah, it ain't gonna happen. I'll never
so
see
it's
Netflix go there.
something that has to do with financial analysis.
Yeah, I mean, just look at the macro of the economy right now. Credit cards are all-time high. People are in debt. Layoffs, I mean, Tesla people laid off people. Google laid off people. Layoffs is in record numbers these days. The growth of the economy doesn't look so hot when you're having to pay, a average. If you're living in New York, $7 a gallon. You don't have enough money to do a little other things that you want to do. So you stop shopping less from Amazon. You start shopping less from Netflix. You start shopping less from the game stores. You start shopping less, period. So your money goes towards living costs because food is high,
You have to
housing is
control
high.
inflation.
Yeah, you have to control inflation. And when you keep printing, inflation is hard to control.
I've got a question. How much would you say that real world events and company decisions affect the stock market and share value overall?
Okay, that's a good question. I love that question because, in my opinion, stock news, like individual companies, like Google or Netflix or whatever it is, they have earnings is the most important, and not only like just if they beat their earnings or whatever. It's their guidance, what their outspec is in the next 24 months, 24 months, 12 months, their guidance. That's the most important thing. So if a company says, okay, so we don't expect to make as much money anymore, the stock's going to drop because there's no more growth. The company's capped out. While you have, like smaller companies that are like flourishing, they say, okay, in the next, 24 months, we see a 30% growth. Well, the stock's going to run because their guidance is good. So importance is guidance. That's why earnings, like stocks, drop and build up really fast. But most stock news, like, the FDA passed something like that, a lot of those informations are insider. Like some of those people knew that long time before you did. They positioned themselves way before you even heard of the news. So like news can be for a grain of salt, but also can be like a split instant decision, like FDA approval. That's like a split different instant decision. Like tomorrow a nuke gets dropped. That's macro event. That's the macro economy. It affects the whole global effect of the market. Now that's a different news that really plays an impact on the market. But like individual news, besides earning, nah, I don't. I think it's all the market is very manipulated.
So would you say that there is some sort of importance to watching the economic, I want to say, like news of the world while making your
Yeah,
market decision?
macro events to me are very important because like if there's shortage in, wheat, most likely the price of wheat is going to go up. So those are really good global effects on not just America but globally. Those type of things are important. But after being in the market so long as I have, I don't even watch news anymore. I really don't. I keep my eyes on macro news for sure, but other than that, nah. It's all light in the charts. I truly believe that you could find really good entry points and exit points just based on the chart. I think a lot of the market, you have to understand the statistics of the market, which makes it very important in my aspect.
That's
85.
why technical analysis does not work every time.
I mean, the charts to me is like a book, and you can really hone in your skills into a chart. Obviously, it's not perfect event. It's not something that's going to be right every time. But I think with a good game plan, you can consistently make money in a market.
Yo,
I'm
I got a
Yo, what's up?
question for you on behalf of BKG. He's asking if you can explain how to trade with an inside bar.
With
So,
the
for
inside bar.
example, like on a daily chart, a bar, the current bar didn't break the previous lower high.
Yeah. Let's go to one. Okay. So inside bar essentially is like an engulfing bull candle. So let's find a good example. What are we on Netflix? Oh, let's get away from Netflix. That's probably why. Let's go SPY. I don't understand better than I do anything in the world than SPY. So good examples of a inside bar move. So this would be an amazing example of it right here. So essentially, there's two ways to kind of look at it. I don't really put too much emphasis on the color, like if it was a green day or red day, but I put emphasis on where the candle actually finishes and where it starts. So if you're opening this day up here, for example, it was a red day. I mean, obviously it was a red on the chart, but if it opened up something like this, where like a cross or something like that, that would be considered a bullish engulfing pattern because it finished not less than the bar itself and it stayed resistance within the first candle. So this would be another good example of it over right here. Let's do here. Green bar. If it started off like something like this and then it created it towards the end of the day, but it never broke the resistance of the before the candle, the day before, it never broke this resistance. It kind of bounced and kind of ended with a day high. You could kind of anticipate, not a perfect method by all means, like nothing is perfect in this world, but you could kind of anticipate more of a bull run coming. So that's how I kind of look at a inside candle. I know Odin trades more of inside candles. I'm not really of an inside candle trader. I 90% of my decision making comes in channels. Like, I shit you not, literally 90% of my decision making comes in channels. I'm a very patient trader. I will literally wait for that thing to hit the bottom of the candle, and I won't take a trade all day, and I'll wait for that one trade, because the one good trade beats shitty 1,000 trades. I'm a found believer in one good trade. That's all you need, is one good trade instead of multiple shitty ass trades. So I'm a very patient. I'm very strict when it comes to investing and how I maneuver around my portfolio. But Odin would kind of fill you in better with this, because I don't really use this method. Does that make sense? We all have our different types of styles.
So
And
if you're looking for like inside bars, I would try to reach out to Big Snipe Mike. I know he
yeah,
loves
Big
inside
Snipe,
bars.
Odin.
So
Those two, they love them. So yeah, you would reach out to those two for sure. Not a style that I use, so I can't really emphasis too much on it if I don't really imply it into my skill trade. So
Got a question.
go ahead.
Is that the same as the strat?
Excuse me.
Using the inside bars. Do they use the inside bars when they do the trading the strat?
Um, I guess, yeah. I guess that's the way you could put it. Yeah.
Okay.
Yeah. I mean, again, I'm not a big inside bar trader, so those kind of questions I'm kind of limited on, because I don't use that strategy. You know, um, my strategy comes merely setting up walls. I mean, if let me share my screen again, and we'll go through like a little 1 minute type scenario where we could look at the market on a replay, like we're doing live trading, and I'll just kind of go step by step on what I look for. That way you get a good idea, and we'll kind of wrap this up and go to the questions, and we'll wrap this up, because I don't want to do a whole 3 hours again. We've already been an hour in, so yesterday was long. So let me share my screen real quick. Okay, here we go. And we'll run, I don't know, we'll just come any day. I don't care. We'll just go fast and stop right here. Cool. We'll run that day. Right there. Perfect. Oh, nope. Go back. What the hell am I doing? Oh, yeah, right here. Well, go right there. Perfect. So we'll act like we're live trading. Market's running. And that's kind of what I do to set up for the market. So before like I was going through yesterday, I always draw my 4 hours, 2 hours, 1 hour, 30-minute. I'll put all these resistance lines so I can know where a next bounce or a next, is coming. And before I start, I always go to the 5-minute type situation and, look at the bigger picture. Why is this not acting right? Okay, there we go. So we kind of get this idea here. We're going to draw the ideas in, so that way we kind of know what's coming up next. Oh no, I hate this thing. There we go. This could be a better channel. There you go. Oh, what am I doing? I can't maneuver these. There we go. And then we go to our 15-minute viewpoints, and we draw events in. Come on, operate. Oh my God, I can't do it. I usually do this on a computer. So, yeah, so that's relevant for now. And then let's go to our 1 hour. We'll see where in there we bounce off this bottom grid, and we're kind of looking for resistance here, which was already drawn in, resistance here, which is already drawn in, and resistance here. So we go back. I only trade under 1 minute. We have different types of traders. You can trade in a 5, 10, 15 minute, whatever your cause is. That's what you want to trade in. So before we even start, I try to hone in onto my skills and see what coming moves may anticipate. So one thing I see here is a left, head, right. And also if I could draw this here, there's a midline resistance here. A neckline resistance, I guess you could call it, not midline. There. So what I would do is, seeing this head and shoulder play out, I'll take a put position here. And let's run it. Let's see what it does. Now, there's two ways of anticipating this before we could go on. Reason why I took this put, because it's in this area of 1 resistance, 2 resistance, 3 resistance, a midline resistance, and a top line resistance. I have a lot of support above my head that I could play these zones for an average down, or I could cut and kind of get into a different area in case of the outcome. But I'm going to play this because of the pattern that I see. And let's see what happens. I'm looking for this headline resistance right here on that channel. Now, we're looking at these areas here. I would always take an average down here and here. Now, being in that type of situation, so I took my first average here. Say let's give it an example. We're in a 1 week contract, or no, let's say 0 DTE. Let's get it, and it's at open morning. The price is at 733. The top resistance was at 377. Why did I? Okay, 377, 37 somewhere, and then 378.25. Now, if I see these zones here, I would take an average down here, here, here. And on this move, I probably would end up with a 0 gain percentage, whatever you want to call it. Now I'm looking for this resistance bounce, because it kind of built up a resistance here. If I put this line down a little bit, because it's kind of irrelevant here, right there, it took that resistance bounce. Now I'm looking for another bounce right around here. Man, that's a hot. Whew.
I'm losing you. I'm trying to see where is your next resistant bounce.
My next resistance where I would cut is right where I should have paused. Let me take back 1 candle. So that way we're on the same page here. 1 candle. Come back, 1 candle. And don't keep running. I said come back. Okay, there we go. So my key resistance before even would be this resistance here. So the idea of how to interpret the market comes down to really how your game plan is, right? So if you're willing to cut, that's one game plan you could have. If you're looking for headline resistance, you could have opportunities averaging up, averaging down. So if I get in here at 377.45 and I took another average up here, average down, on this move here, I would make money. It wouldn't be much. I mean, 5, 10%, but it would be a successful trade. This is where I would have my key resistance cut. Now, once I get to this level, I would look for this cut right here. So this candle here, I would take my profit because we started where we were at, but we had an opportunity to average down on our contracts. So my put position would have played out right here. I mean, not much on this move, maybe 5-10%, but it's a good successful trade, and we could cut this and look for another opportunity. So let's look for a different opportunity. One thing I could see from the far picture is this line as well. I don't know why I didn't draw that in before. See, once you don't have these lines set well, you miss these opportunities, and that was a good opportunity that we just missed. So that's a my bad move.
So, a question. Those channels are helping you get to your PTs.
Yes, yeah. My price target. So, I mean, this was so let's go back 2 candles and say we had draw that in, basically. So this would be my cut area right here on the bottom of the channel. So once it hits this candle right here, this would be my new for a call, because it's literally in the bottom of the channel. Now we have one little idea here as well, which is a more downside play as well that we can take the opportunity of, but I don't like it and I would never play this. But this gives you another opportunity to kind of take an average down. But it's the candle wick, that's the hammerhead, and this is a sign of a reversal. So if it touches here again, it's going to go in a bear market, guaranteed, because this is a sign of the reversal, and this is a very weak channel. So I would take a call right here, and then obviously, you know, that would be my entry point here, and then my next exit point would be on top of this channel or right here. So that candle here, I would take this exit. So, but there's different styles that you could use as well. So say if you're a big option trader, you know, I generally myself, I trade 25,000 slots. So when I get in a position, I'm buying $25,000 worth. So, you know, it depends on what time of the day is. I could buy hundreds of contracts. So when it gets here, I may close 90% of my contracts, 95% of my contracts, and just leave a little hope and opportunity for this run in case it breaks out. If it doesn't, I'll cut the other one here. The 5% I have left, I'll cut it here. I'll get a less reward because I cut it at a less area, but to me that's cool because it's still a profitable trade, and also you have a little potential of running here so you can make some extra money. So, you know, in that situation, that's what I would do. Obviously, that didn't play out, so I would cut here and grab my whole, you know, I'll get out of my position completely. So that was another move that you could always look at these little areas, but I would never play in a situation like this. I would look for a good opportunity. Now, let's put our candles a little right there. Okay, so as these candles are going, you know, I missed this, which was a great little reversal because it bounced off the top of the trend, but we missed it. So it's all good. What we do is put our channels in and see where our next lines of resistance are. And this is kind of how I just maneuver through the market as the days are going. So right here, we're bringing it down. There's a resistance right here. So this is the next line resistance. I may take this put here, but as soon as it breaks into this channel and I see, okay, well, you know, the channel is going to continue, I would back away and cut this loss. I would try to aim for that 5-10% cut, but I would take this put here because, I mean, at the end of the day, is a resistance. and it took it. So right there, I would cut that, and I would take the loss right here. So my next setup, where I would look for another setup, is at this resistance here. Oh, hold on. Let me go through back and see if I have these actually lined in, drawn in real correctly. All right, there we go. So right there would be my next put opportunity. Now, this is a different setup that I would like to do because you have two resistance here. I may gamble and say, look, I'm going to take the put here, but I'll take an average down here. And I'll cut as soon as it breaks here. If the channel continues to run, I mean, I'd be stupid to hold it. So I'm going to cut it here. But I'll take a bigger kind of sump loss in the hopes of coming here. That's one strategy that you could use. Or you could cut and kind of get back in here. Kind of depends on what strategy you want to use, right? So, I mean, at the end of the day, it's your portfolio. Your gain, your loss. So right here, I would take this put. And I would look for this opportunity, take an average down right there. So I would take that next average down here. But the idea is, so look at where we cut, right? We cut here and we're on our second bad loss, right? But most traders that I know, I mean, I've been doing this Discord thing for a long time. They would literally average up the whole way here. And this would be a very bad trade because this would really kill your contracts, your portfolio. Because, I mean, say if you have a small account and you're getting one contract, two contracts, three contracts, four contracts, five contracts. Now you're in like $500-$600 and you're down in $300 loss right here. Because you may be down about 50% right now. You know, so if I take a $10-$20 loss here, a $10-$20 loss here, and a $10-$20 loss here, it's still a loss, which sucks, but you're playing your risk management because one of these reverse on these demands are going to work, and you're what you lost in 10-20%, you know, like on these here, you're going to get back. So you kind of have to anticipate where to play these you know, movements and really hone into your skills. So this channel is really running. It's a really good channel. But again, we take our loss here. And we anticipate our next moves. That's kind of how, which way you want to take anticipations and rules to the market. Because not every day is a rosy day. Not every day is a good day. But if you stay with your game plan, you're going to have a better successful rate of doing something. Always look at these bigger pictures too, which is very important. Oh man, we just went to a different one. Shoot. Hopefully we can get back where we were. Oh man, seriously? Where we were at? Kidding me? I probably could find it.
It's alright, we get the point.
Yeah, so I mean, you get the gist of it. You know, that's kind of the way you want to play the market. Cut your limits, cut your losses. Not every day is a shiny day. Not every day you're gonna be raining and doing in money. But the whole idea is to consistently take small gains and take small risks and get really comfortable with what you're doing. And then you can, you know, do something differently. So, yeah, I really lost that place. I really did. Okay. go, I don't know, shoot, we'll go here. Okay, we'll work at a gap. Why not? So basically, this is stock market open. Okay. So, I mean, different setups, different days, right? So, whoa, don't go. Oh, well. Anyways, there's too much now. I think I messed this up again. So, yeah. I had to go to the 1 minute. We won't go so far back, I guess. We'll go here. Why not? Yeah, so, I mean, you just draw these lines in, and you kind of get your entry points and exit points based on the channels that it's creating. And in resistance supports that you could play off those channels. And that's kind of the most important thing you could do. That was a bad draw line channel, but yeah. Yeah, so some days, it's a bull market. You're going straight up. You want to play the call. Some days it's a bear market falling straight to his death. You want to play the puts. Look on basic resistance supports and your bigger pictures, your 2 hour frames, your 1 hour frames, and really hone into it. And consistently just play your game plan. And that's what it really comes down to, is just practice, practice, study, practice, practice, study, practice, practice, study. And the more longer you do it, you're going to be better at it. So,
Okay,
yeah,
I got a question.
Questions?
I got a question. How far do you take your channel back?
I mean,
a couple of days, weeks, months.
It just depends on what kind of swinging you want to do, right? So if you're a scalper, you want to go into the 5, 10, 15, 1 minute type charts. If you're more of a swinger, you want to kind of go into like the 30-minute and see where the top of the channel may be, so you get a longer swing on it. So for example, if you're gonna play a longer type swing, you kind of have these type of moves here, and you could kind of hone into where your bottom will be, and you could anticipate, like, instead of getting scalps of 10-20% scalps, you want to get longer contracts, so like 3-4 weeks out, and kind of play the bottom top. So that's one strategy you could use. It's less instant, because day trading you have to be like in out, really anticipate the next moves type deal. And when you're getting longer contracts, 2 weeks, 4 weeks, 2 months, if a day it opens up with a 10% crash, it sucks. You'll probably be down 20-30%, but it's not going to kill you. It's not a killing event. You have time to really anticipate the next moves and kind of think about things. So it's a slower pace. If you're trying to scalp 10, 15, 20%, you want to, do it in a smaller time frame and really hone into like what movements will come out of each ticker type situations, So that's kind of basis on what game plan you want to use.
Okay, but my question is not really towards options, because I know you're going to not go all the way to the expiration. and you need to see certain things for options, would that still be in effect for just a regular trade? Like, I'm a short trader, so
Yeah. A chart
and
is a chart at the end of the day. So, I mean, if you're looking at, you know, a position trade, so say let's go to a different ticker. Let's go to I don't know, shoot, uh, Shopify, cheaper contract. You can kind of get a better idea, I guess. Yeah, there you go. So same theory works. So if you're getting into a position as far as getting calls or, or wow, that's we're not even in the same league here. So we go to 1 hour, and you're trying to get into a position where you're like, trying to make X amount of dollars out of that position. Same theory applies. Channels not only work sideways, they work, horizontal channels as well. So, 2-line mid resistance. So same thing here. If you're trying to swing it into a bigger swinging pile, like you're trying to do it, days swing, you want to get into these type of plays, where it actually hits a resistance and you have comfortability of like another resistance under you. But I wouldn't want to get a position where, if the stock is at $60, say here, and your another resistance is at $49, because that's a wild ride down. But if your resistance is like, like, $5-10 away, especially in here type situation where it's $1 away, like here, you may want to get a few shares here, and then kind of leave the rest of your pot for having it hit here. And if it doesn't work out, then you want to cut it here, around here. But if it works out, then you're gravy train, and that was a really good entry. So, like, for example, on this type situation, if you got in here, you got in here first of all, got in here second of all, you made some money, but are like, okay, well, I didn't make enough and I'm not good, and it didn't work out. Well, you had this resistance to play and fall back on. You could have took another position here, or just keep your position how you have it, and kind of look at the under break line, this last little legs. And if it falls under here, then you want to cut it. But once it bounces off, then you have, upside potential, and you can make, $9 a share,
Hey,
basically.
Snort, not to cut you off. Just so we keep on a sensible time. So it's been about an hour and 20 minutes because you started 10 minutes late. And everyone can continue to, few people can hang behind, but obviously trying to keep class to a sensible time. So I would do some simple Q&A with a couple people so everyone can get a chance. If some questions don't get answered, people can hang around, but we had a 3-hour session yesterday and there's nothing wrong with it, but just having a time limit would be
Yeah,
able
I'm
to
with
get
you on
everyone's
that.
questions
I'm
answered and stuff. So yeah,
I'm,
go ahead.
I'm truly with you on that. Yeah, let's do this whole wrap down thing. Let's go ahead and finish up with the questions, because it is a Saturday night, and I'm gonna go spend some time with the family. So whoever has a question, please I'll try to answer it as best as I can. But yeah.
I guess it's all good.
Yeah, I guess that's it. Yeah, okay. So
Yeah,
if
I
we
wasn't
don't
I
have any
here
more
for
appreciate your efforts.
I
Stock
wasn't
Odin,
here
I
for
think.
most of the class, so I can't really ask any questions. I was occupied doing something else. No one
No,
really
I
has any
think
questions.
I think somebody had a question on inside bars because that's not really my trading style, and maybe you could
Okay, see
answer
that
that.
would have been good for Mike to be in here. Mike likes to trade inside bars. Unfortunately, he's not in here at the moment. But yeah, there's a lot of people like to trade inside bars. Takes a lot
I
of
guess
inside bar steps.
on the market talk, y'all can ask that question, and whenever he's available, he'll, answer that
Yeah,
question
yeah.
for you.
I would ask Big Snipe Mike about inside bar trading. That's one of his strategies that he likes to play. So yeah, I would definitely ask him about that. Anyone interested in it? He's pretty good with that. So
So
anyone
yeah,
else questions? Smooth, you got any questions? You were questioning it up yesterday. It was great.
No, I'm pretty much good. I'm gonna try to get with Mike because I wanted to learn a lot about inside bars and learn about the strat and the wheel. I want to learn about the wheel. So I'll talk to him about that because I know for the beginners the wheel might be confusing for a lot of people. So, but this is
all right.
great, and I appreciate all your efforts in getting a program together for us. I'm sure everybody else does too.
Yeah, this
I,
session was really helpful. Thank you.
well, I'm glad I could help. I won't do another class. I think next week some other analyst has a class, and then we'll try to alternate, and then I'll probably do one like next month sometime. All right, yeah.
Yeah, I think we're gonna
Enjoy the
try
rest of your day.
to do at least one or two classes, or well, not necessarily classes, but voice VC kind of events. Tomorrow a couple of us might hop on just for a short amount of time to go over Sunday watch list. I believe you did some in here today, right? You went over some charts, but
Yeah,
obviously,
I did. I'm not finished. I'll post a whole bunch of them by tomorrow.
yeah. So I'm sure tomorrow we might have a very quick. That would be the time that I usually post my watch list for the week is on Sunday. So a couple people might be able to jump in here.
Yep. And then once you see the list or whatnot, and if you have any questions or any rebuttals, I'd love to hear your side of the story too, man. So yeah, enjoy the rest of your day. Keep it easy, y'all.
That's it. Everyone's done then. All right. Yeah. Okay.
Thanks so much.
Yep. For anyone that doesn't have the Pro Plus and wants to get it, there's a 30% off code. It would be Stream30. You get 30% off forever. So definitely check that out if you're interested. If anyone has any questions and they were too shy, go ahead and post them in main chat and we can answer them there. And with that, I think everyone have a good night, and hopefully we'll see you back here in voice channel, either going over charts or some more class or something. So everyone have a good night.
Yeah, enjoy the rest of your day, man. One love. Bye.
All right. Good night.